Wall Street is back in full risk-on mode, Dow up more than 650 points, marking its third consecutive green day. However, big tech is not leading this time. Let's delve into who truly moved the market today and what key factors to watch tomorrow. Today, the Dow Jones Industrial Average closed at 47,112.45, surging by 664 points, a 1.43% increase. The S&P 500 reached 6,765.88, up 60.76 points or 0.91%, while the Nasdaq Composite climbed to 23,025.59, gaining 153.59 points, a 0.67% rise. This was a broad green day, with the Dow leading and tech stocks showing gains but lagging behind value and defensive sectors. The market rallied on renewed rate cut hopes, with futures now pricing a good chance of a Fed rate cut in December after softer economic data and falling bond yields. Lower Treasury yields and a softer dollar provided significant support for equities and other risk assets. With the government shutdown resolved and data returning, markets are betting that once delayed economic figures resume, they will justify an easier Fed policy. This also reflects a sentiment bounce, as traders are buying the dip into a holiday-shortened week, following weeks of fear around tariffs, AI valuation worries, and weak consumer confidence. Today's leading sectors included healthcare and pharma, benefiting from defensive flows and positive drug news. Consumer discretionary and retail also showed optimism on holiday spending, even with a cautious consumer outlook. Lagging areas included semiconductors and AI plays, with NVIDIA and AMD under pressure due to AI chip competition headlines. Select staples and media names like Smucker and Omnicom slipped due to company-specific worries. Notable large-cap gainers today included Best Buy, up around 5% after beating earnings and raising holiday guidance, driven by stronger PC and gaming demand. Analog devices also jumped approximately 5% on strong fiscal results and outlook, with the market appreciating its broad-based demand and margin strength. Merck gained about 5% following FDA approval for Keytruda in bladder cancer and an upgrade from Wells Fargo, reinforcing its oncology leadership. Stanley Black and Decker rose 5 to 6%, continuing its momentum from improving margins and cost-cutting progress, with the street favoring its turnaround story. Alphabet, or Google, saw a roughly 4% boost from headlines suggesting its AI chips could supply Meta, challenging NVIDIA, and benefiting from the broader rate cut and AI growth narrative. On the other hand, names under pressure today included Advanced Micro Devices, down about 4%, hit by reports of Meta exploring Google TPUs and profit-taking after a significant run-up. NVIDIA also saw a decline of roughly 2 to 4% due to fears of new AI chip competition from Google and others, with even small negative headlines impacting the stock after its strong performance. Smucker continued to slide about 3.7% after weak guidance and concerns about growth in packaged foods. Omnicom Group was down about 2.6%, affected by advertising and media spending worries, coupled with broader recession fears weighing on agency stocks. Netflix experienced a mild pullback of about 2 to 3% as investors rotated out of high-beta growth stocks into safer names, driven by rate cut hopes. Market breadth was very strong today, with advancers crushing decliners on the NYSE by over a 4-to-1 ratio. This indicates a full market relief rally, not just a tech bounce, at least for today. However, AI darlings are taking a breather, suggesting that leadership is rotating, not disappearing. Tomorrow is a heavy data day, assuming releases aren't delayed again by the shutdown mess. We'll see durable goods orders for October, the second estimate of Q3 GDP, and critical core PCE, personal income, and spending data, which is the Fed's favorite inflation gauge. Also watch for jobless claims, housing data, and oil inventories, which will provide a read on labor, housing, and demand. If data comes in soft but not disastrous, it supports the December rate cut story, which would be bullish for stocks, especially rate-sensitive sectors like tech, small caps, and housing. However, if data is too hot, showing strong inflation and demand, the market may reprice fewer cuts, bond yields could jump, and we could see a quick pullback after this rally. Expect volatility in a low liquidity holiday market, with thin volumes into Thanksgiving Thursday and a short Friday session, meaning any surprise can cause bigger than normal intraday swings. So that's your US market wrap, covering who ran, who crashed, and what can move the market tomorrow. If you appreciate straight, no-nonsense market updates, please hit like, subscribe, and turn on the bell so you don't miss tomorrow's reaction.